Ulta Beauty stock is down big and it trades at its 52-week lows. Does it mean that Ulta is a good stock to buy now? Welcome to Global Value. In today's video, we're performing a fundamental analysis of Ulta Beauty using Warren Buffett's investing framework. We'll look at 6 key financial metrics before we figure out 3 different fair values to understand what Ulta is worth in today's stock market. Plus, I'll share a special bonus that could be the deciding safety factor when adding Ulta stock to your portfolio. Right now, Ulta trades for $331.43 per share. In its last day of trading, it's down 2.81%. From August of 2023, Ulta Beauty stock is down 19.2%. This is down at the same rate the S&P 500 is up over this time. In the last 5 years, it's a different story with the company compounding at 8.3% annually. They briefly beat the market in 2023. In the last decade, they beat the market the entire time, compounding at 12.2% annually. When we go back to when they were listed during the global financial crisis, Ulta is one of the top performing stocks in the market. They've actually compounded at 22.1% annually despite their recent drawdown. Today, Ulta trades at its 52-week lows. These are down $230 from their 52-week high. Still, Ulta is a big retailer and they have a $16 billion market cap. Ulta's stock has cratered after their CEO warned about slowing demand for beauty products. This comes at the same time that they're facing increased competition from other retailers like department stores Macy's and Kohl's. And they're facing major e-commerce competition from Amazon and from bigger names like Sephora. Starting with our first metric, we want Ulta's average returns on capital to be above 14%. You want great form just like a company wants great value from its capital. No surprise, Ulta took a big hit to their business during the pandemic. Since then, they've rebounded very strongly. They earned below 9% returns on capital in their calendar 2020, which was their fiscal 2021, and since then they've earned nearly 40% returns in the last 3 years. Those numbers are above their historical trend. Ulta earns 30% returns on capital in an average year over this time. That's more than 4 times better than a normal business, which only brings in 7% a year. This is a strong check on metric number 1 as Ulta generates high returns and can create value in their business. Ulta's performed nicely in the last few years. Now, how does Ulta make money? With 1,385 stores at the end of 2023 and a partnership with Target, Ulta Beauty is the largest specialized beauty retailer in the United States. The firm offers makeup, which is 41% of sales, fragrances and skincare, which are 19% of sales, and hair products, which also make up 19% of sales, in addition to bath and body items. Ulta sells private label products and merchandise from more than 500 vendors. It also offers salon services, including hair, makeup, skin, and brow services in all stores. Most Ulta stores are approximately 10,000 square feet and are in suburban strip centers. Ulta was founded in 1990 and is based in Bolingbrook, Illinois. Next, we want growth in their sales, earnings, and free cash flows. As an investor with high returns, we want more, and that's what we see for Ulta. In the last 5 years, Ulta has grown their sales by 53%. Their earnings have also grown by 78%, and the company's cash flows have steadily grown, growing by 14% over this time. Things are a bit down from the company's peak in 2023, with their margins declining since then, so that is something to watch out for, and that's why there's been a lot of pressure on the stock recently. Still though, all of these are up, and coupled with their high returns on capital, it's exactly what we wanted. This is a check on metric number 2. Today, Ulta Beauty is owned by just 2 super investors, and this is a small percentage of the Mayors and Power Growth Fund and Jensen Investment Management. Next, to look at Ulta as an individual shareholder, we want earnings per share growth in metric number 3. Ulta's done a great job coming back from the pandemic, and their earnings have steadily marched upward since then. In this time, their earnings per share have more than doubled, as they've also bought back 16% of their shares to add to their 78% earnings growth. At the right valuations, this is great for Ulta shareholders, and it's a check on metric number 3. Metric number 4 is similar but even more important. We want free cash flow per share growth. Their cash flows are close to their earnings, and they've grown in these last 5 years. They also had a good amount in 2021, even though their earnings were down at that time. This is solid performance from Ulta, and it's a check on metric number 4, especially important as free cash flows are the lifeblood of any business. Next, let's look at their balance sheet. Great companies can grow, earn high returns, and don't need a lot of debt. Even as a retailer with lease expenses, Ulta's net debt is pretty low compared to their cash flows. Certainly, they're in better shape than a lot of other retailers, and right now they only have $1.4 billion in net debt. In the last 5 years, they brought in $4.6 billion of free cash flow, so they easily cover this and can pay this all off in just over a year of free cash flow. That's what we wanted. It's a check here on metric number 5, and the numbers still look healthy. Ulta is a perfect 5 for 5 so far. Does Ulta have what it takes to be a select 6 stock? We'll find out right after we cover our safety bonus. Warren Buffett's teacher and the father of value investing, Ben Graham, wanted to see a current ratio greater than 1.5 times. This is a key measure of short-term liquidity for how a company can pay its bills in a hurry. While this is a general guideline, it's great to see that Ulta passes this with over a 1.7 current ratio today. That's what we wanted, and it's a check here on our bonus. Safety-wise, Ulta's short and long-term look healthy on their balance sheet if they can keep this up. Now, what are they worth? The big metric of them all is metric number 6. We want their average cash flows divided by their enterprise value to give us a yield that's greater than 5%. This would match the history of the S&P 500 and be above the 10-year treasury today. Ulta right now has a $17.6 billion enterprise value, which is what we get when we add their market cap and their net debt together. This can help us look at the business like it's a private company. In an average year over this time, Ulta brings in just over $900 million of cash flow. When we divide that by their enterprise value, it gives us a 5.2% average free cash flow yield. They have a 5.7% 3-year yield, and in their last 12 months, they also brought in about that same amount, so they have a 5.2% yield. That's just over the benchmark we wanted, and it confirms what we've been looking at. This is a check on metric number 6, and Ulta is a select 6 stock. We still have 2 more valuations to look at before we reveal their fair value per share at the end of the video. Next, let's give Ulta credit for its growth. Here we'll use a DCF model based on historical assumptions to grow their free cash flows into the future. Remember, do your own homework. Ulta's been a predictable business in their past, so we'll take their free cash flows and assume that these grow at 8% in the next 10 years. Then in the following decade, we'll assume this growth is cut in half and they only grow at 4%. After that, we'll add in the company's tangible book value to estimate their net worth. Then we'll look for a market-beating 15% rate of return, which is what Warren Buffett wants from his investments. To get those returns today with Ulta's valuations, it looks like a fair value is around $240 per share. Remember though, this is only our second valuation and there's more to come. Currently, Ulta's trading at its lowest valuations in almost a decade, trading at under 1.5 times sales. The company's also trading for 13 times earnings, and they're at 19 times EV to free cash flow. Since it was listed, Ulta's been a long-term compounder, and from its lows during the global financial crisis, the company's stock is up more than 100 times. This makes them a 100-bagger. This is why, based on those past multiples and future assumptions for the company, our third valuation comes in at $576 per share. Still, there's something even more important than the numbers that we need to learn about. Now, Buffett cares about the numbers, but it's the qualities of a company that he truly loves. Why don't we learn what these are for Ulta through a long and a short thesis, and we'll start with a long thesis first. Number 1, as the largest specialty beauty retailer in the US, Ulta has access to leading brands and exclusive products. Its merchandising encourages frequent store visits and draws shoppers from department stores. Number 2, Ulta's loyalty program of more than 40 million active members is getting a boost from its expanding Target shop-in-shops. Ulta can use consumer data to improve its marketing, merchandising, and e-commerce operations. And number 3, Ulta benefits from rising consumer interest in beauty and wellness and the proliferation of innovative products with high price points. Yet things aren't all positives. Let's look at a short thesis as well. Number 1, beauty products are available through many retail channels. This puts Ulta in competition with the largest retailers in the US. Ulta has also been negatively affected by Sephora's partnership with Kohl's and Amazon's big push into beauty. Number 2, Ulta has no control over consumer spending on beauty or product releases from major producers, but these factors affect its sales. Number 3, Ulta's sales growth has slowed from peak levels as it's become much larger and its opportunities for new US stores diminish. Perhaps the company looks overseas and leans on that for their future growth. Now let's put everything together for Ulta Beauty. In our fundamental review, we learned the company is a select 6 stock. They earn very high returns, they've grown, they've bought back a lot of shares, they have little debt, and compared to their free cash flows, they trade attractively in the market right now. Even with a slowdown in beauty spending and increased competition, Ulta's shares have taken a beating that might not be totally warranted. Remember, this isn't financial advice and it's no buy or sell recommendation. When we put Ulta's business qualities and their numbers together, today it looks like their fair value is around $358 per share. That's up $28 from their current stock price, and Ulta looks undervalued. To find even more undervalued stocks, sign up for our fair value investing tools, make requests, and get exclusive bonus coverage of 108 stocks and counting.